Hello, everyone. Well, I don't know what was with that introduction. Never mind, let's carry on. Hello, everyone, and welcome to the Next Gen Planners podcast. My name is Dan, and I'm the head of community experience here at Next Gen Planners. And today I am delighted and very, very happy to be joined all the way from Seattle by the wonderful Nancy Reid. How are you doing today, Nancy?
I'm well, thanks. How are you, Dan?
I'm good, thanks. I'm pumped up because whenever me and you have conversations, they're always just ridiculous and hilarious. And it's a good way to get in the mood to do a podcast because I'm absolutely buzzing before we've even started. So it's lovely to have you on. I said this to you last time, but I feel like I've known you forever. You know, with some of the conversations we've had, it's been really, really fun. So it's nice to have you on and talk about something serious for a change. So for anyone who doesn't know Nancy, she is a counsellor specialising in the individual, family, and social impact of money. And the work she does is really cool because she consults individuals and families in aligning their invested wealth with their charitable values. Now, that's quite a cryptic way of saying what Nancy does. So we'll figure out more about what she actually does in the podcast as we go on. But to kick us off, Nancy, can you just tell us very briefly a bit about what it is that you get up to on a daily basis?
I'm giggling about you saying that whenever we talk, it gets to ridiculous places. Okay, so I do two things on a daily basis. For the most part, I help investors identify and write down what matters most to them as it relates to their money. That sounds pretty abstract, so I'll give you a couple of examples and then I'll tell you the second thing. Some people say that they want to invest sustainably. This is a category of human endeavor in the financial services industry that you have covered beautifully. You've had some really interesting other guests on your podcast who've spoken really intelligently and in sophisticated ways about sustainable investing and what's available out there in financial markets for folks who say they want to do that. What I do with clients is try to scratch a little deeper into what does that mean for you? Sustainable to whom? For whom? People say climate. Okay, well, what exactly what exactly does that mean to you? Not trying to be a client scientist, not trying to talk about, tons of cubic CO2, but rather, what role do you as an investor want to play? What effect do you want to have? For some folks, attempting to do no harm is enough. And they quite often, when we get to talking about it, realize that doing no harm as an investor in, for example, publicly traded companies is not nearly as obvious and straightforward as it may sound. Yeah. For others, they really want to invest in solutions. Well, solutions to climate change. What does that mean, right? And what are the implications on a portfolio construction basis, right? An investor who wants to over allocate to solutions may find themselves wildly illiquid, for example, and taking on for many forms of risk in the early stage investing asset classes, right? In your venture, in your angel, and your growth equity. Last thing I'll say about this, and then I'll tell you the other thing I do. It is said about impact investing that it may be riskier than whatever the normal investing approach might be. But the reality is there are many forms of risk. I mean, look around in the financial markets right now. Are you not taking risk by investing in mainstream financial markets? I would argue, no, of course not. The very act of investing is an exercise in risk management, risk allocation, choosing which risks you want to be exposed to. And the whole game is, can you understand those risks and maybe manage them better than average, right? In impact investing, it's opening up an entirely other world of risk. What kind of climate risk, reputation risk, I had a client recently who was concerned that that people might look at what they're doing, who they're invested in, what they're invested in, and say, you are not doing enough. You are a public entity. You are a public figure. Why are you not putting your money where your mouth is? And so they really wanted to do a deep dive on understanding the risks they were currently exposed to, which would be perceived by mainstream Wall Street and the mainstream financial services industry as being a pretty normal set of risks, right? Hopefully that made sense. The second thing I do, once folks have written down what matters most to them, which problems they want to solve, which risks they want to focus on and try to manage, is then, to the extent that those folks then realize they don't know how to do that.
Yeah.
If, for example, they say they want to address gender equity in a particular geography, in a particular industry sector, with a particular at-risk community, what is your average financial services firm to do with that information?
Yeah.
Right? That's not obvious how to do it. If it were obvious how to invest in a way that solves some of our society's biggest problems, we would live in a very different society.
Yeah.
So to the extent it becomes clear that they need other help, I help investors find that other help. And that looks like advisor search. That looks like I'm going to carve out a portion of my portfolio and find a new team to help me deploy it in different ways. It could look like a lot of things, but quite often it allows people to find the support team that they need in order to take the next step. I am not a financial advisor. I don't recommend securities or funds or even advisors.
Yeah.
Necessarily. I certainly don't recommend managers, but I do help folks find the teams that will help them get where they need to go.
It's really good. Yeah. It's fantastic to hear you explain it and the passion behind it, and the kind of patience that you take with it to explain it. Is really good. And one of the things that you mentioned there is helping people kind of realize what's important to them. And when you're working with anyone, but especially high net worth individuals, is their values, because we talked about this last time, and as pretty much everyone out there has an idea of and knows, money doesn't necessarily bring you happiness. It can bring you it can be the tool to buy happiness in the future, but it doesn't necessarily as a thing bring you happiness. So what is the process that you go through with those clients that you work with for actually really identifying what their values are?
I think there's two different questions in there. There's a question about happiness, and then there's a question about identifying values. I'll talk about happiness first, because it's there's a ton of research actually by people much smarter than me about what happiness is. It's kind of you may disagree with this, it's kind of an American obsession, frankly. It's in our Constitution, life, liberty, and the pursuit of happiness. Yeah. But what does it mean? It's culturally specific, right? An ideal of happiness may look and feel and behave differently in one culture versus another. But all the happiness research that I've had the privilege of trying to read and understand kind of boils down to two things. It boils down to connection, relationships, meaningful relationships that endure over time, and some of which are intimate relationships, some of which are loose relationships, like the kid at the grocery store, for example. So a network of relationships is thing one, and thing two is a feeling of competence. And that looks like progress towards long-term goals, basically, right? Feeling like I have the skills to solve the problem before me, maybe not today, but over the course of time, I'm going to chip away at it, and it's going to be immensely satisfying to me. So those two things, connection and competence, according to my understanding of the sociological and and psychological research on happiness, all the organizational behavior folk who've written beautifully on the subject, those two things kind of add up to happiness. And for the wealthy, folks who are phenomenally wealthy, quite often the money gets in the way of both. The money gets in the way of feelings of connection. A person who finds themselves in a situation of extreme wealth often finds themselves surrounded by people who work for them. And that's different. That's a different dynamic than being surrounded by, neighbors and friends and work colleagues and family and the kid at the grocery store, right? A person who has come into, let's call it 100 million, pick your currency, dollars, pounds, euros, quite often surrounded, like it is profoundly isolated, right? Which the rest of us who look at those people like, aren't they lucky? Must be nice, right? It would never occur to us to have empathy for how weird and isolating that experience quite often is. So that's thing one is connection. And it can interrupt even the most, like, old friends come out of the woodwork because they have an investment idea. Your brother-in-law, turns out, is an accountant and wants to work for you. It just gets real. Your siblings, right, may or may not have the same kind of wealth. And that is some complicated and lonely business, right? Okay, so extreme wealth interrupts connection. It also interrupts a feeling of competence. None of this is universal, of course, but quite often it does. And what I mean by that is, if you're surrounded by people who suck up to you, who say, oh, you are amazing, like, oh, what a genius you are. Oh, yes, sir. No, ma'am. Here, let me get the door for you. God, you're amazing. It would be so great to have you at this party. We would love to have you at this party. Well, it turns out it's a fundraiser, right? That's the connection problem. But if you're surrounded by folks who are unwilling or feel unable to provide you with constructive criticism, like, hey, that thing you said was super inappropriate, or that idea that you're working on is a bad idea, right? The rest of us are lucky enough to get that feedback all the time, right? And if you're really wealthy, quite often you don't get it. And that's a weird feeling too. It is, again, isolating, but it's also, it impairs their feeling of competence sometimes. Now, this is not universally true. As I said, there are lots of folks, especially those who made their own money, who are very clear and secure in their feeling of their own competence. Of course, God bless them. But those are some of the mechanics of how money can interrupt happiness. Do I help clients with that? I do not. I can't help them with that. That is their spiritual journey, developmental journey to walk. And I am not their fairy godmother. I am, however, a little empathetic in a world that is not inclined to feel sorry for them for the obvious and totally righteous reasons. And they understand that too, right? They're like, God, I'm so lucky. Why am I so miserable? So you asked another question. You asked two things.
Yeah,
I forgot the first one.
Firstly, I mean, it's hard not to be empathetic with someone who has just said what you've just said there. If, like, not you, but I mean, as in that person who says, I am extremely wealthy. Why am I so unhappy? And then they feel like they're ridiculous for feeling that. And, even the majority, anyone out there would not want them to feel like that. Like, that's just, we just do not want people to, I mean, I agree with what you said. We're kind of built in to not feel sorry for people who have ridiculous amounts of wealth. And I think that's, it's not unusual.
And they get that.
Yeah. And they get it, like you said, but we don't want them to feel like they have nowhere to go if they don't feel appreciated or anything like that. I mean, that's just ridiculous. Like, that is not a route that we want to go down. The second question I asked, by the way, was the process. Well, yeah, the process or the kind of way that you help them identify what their values actually are, because it's a big part of life. All these self-development books, all these personal help books that are out there, pretty much every single one of them says point 101 is to identify what you value in life. Because if you can't start with that, where you've got nowhere to go. So what do you do to help them actually identify what they really value in life?
Way to bring it back to something relevant to financial planning, by the way.
Yeah.
All of this is all of this is very interesting and a little weird, but highly relevant to financial planning, because of course the process of identifying values, as exemplified in my career and yours and those of many of your listeners, starts with identifying your values.
Yeah.
So how do I do that? I don't have a magic algorithm for this.
Yeah.
Different people have different learning styles, and different people have different levels of experience. So for someone who is not a first-time investor, who has been at it a while, one way to do it is, this is going to seem terribly touchy-feely to some of your lovely listeners, but to look at one at a time financial decisions that they have made in the past, either a philanthropic decision or an investment decision, and look at it and say, all right, how'd that go? And if they can tolerate some touchy-feely language, I'll say, how did it feel? Which is not a normal line of inquiry in the world of financial anything.
Yeah.
But it needs to be, because I think that one of the conceits here in my work, which is a sort of on the weird fringe of impact investing, but also at impact investing generally, is to rehumanize and reintegrate just financial decisions and investment, right? So we're going to drag this off an optimization spreadsheet and bring it back into the realm of that which is human, that which is relational, that which exists in an ecology and on a planet. So feelings maybe are relevant to that. That's my hunch. And for clients who are hip to that kind of a conversation, we can say, all right, so hedge fund X, recommended by your very fancy financial services firm. How did it feel? And they look at me blankly, right? Like, feel? I don't feel anything for these people. Oh, really? How might it have, like, how did it feel not having any feeling about allocating 2% of your net worth to a thing, right? Do you want it to affect your life at all? The answer does not have to be yes, by the way. Some people, they just want to check out. They want to outsource this entire thought process. And that is okay. And those people, God bless them. They are really well adjusted. They can go on and have fulfilling lives. They have no business becoming my client. Yeah. Others, may feel differently. And they want to say, I look at this portfolio and I see, in one example, I see all men. Everywhere, up and down the value chain here, it is all white dudes. My advisory team is mostly dudes, except for the beautiful young woman they have on the team to be delightful, to charm us, but does dramatically underpaid and abused in her workplace. And then all the managers are dudes, and all the way up and down, at the advisory level, at the manager level, at the level of underlying securities, both board and officers. And that's an area, like, whatever bugs them about that is gold for me, because that is an area of inquiry that we can explore. Oh, really? And how does that feel? What would you like it? What bugs you about that? What bothers you? What would you like it to look like? If anyone, just staying on these social issues for a second, if an investor wants to see and feel and experience something different than the status quo, they are going to have to ask for it. They're going to have to be a little bit cheeky and a little bit in their power, right? And say, actually, I don't want an all-white manager stable. They're going to have to ask for it, because the default settings of the financial services industry, all love and respect to our white male colleagues and allies, are pretty white and pretty male. How else do we help folks identify their values? Some people are different kinds of thinkers. They want to have a design, like I've been trying to learn about design thinking, right? They want to have a very overt process for doing so. They want to build it zero base from the ground up, white sheet of paper ideation. And we want to have an ideation session. Okay, what do you think might matter to you? Here's a list of values that other people seem to have. Which of these resonates with you? Let's pause, take a breath, and try to take in each of these values and see which ones resonate with you. And then we have a process to identify which ones, win. It's a bracket. And then back to the other example, the previous example, where we can look, we sort of back into the values based on what has worked for them in the past and what has not worked for them in the past. So when I gave $500,000 to the Natural Resources Defense Council, it felt good. Why? Well, it felt bold. Boldness. It felt systemic. It felt like utilizing the levers of existing power structures to, sorry for my language, to fuck up existing power structures. That really appeals to folks, right? To that, or at least to that investor, right? So that, though, in there, you can see, you're smiling and nodding there, you can see what the clues are to what their value system might be.
Yeah, absolutely.
Does that help?
Yeah, I think it's a really good way of identifying them, actually. I do. And it's given us a really kind of good insight into the journey of someone who perhaps doesn't start as not many people start as ultra high net worth. Nobody really starts as ultra high net worth. The family might be ultra high net worth, but they might not be. But from that journey of them getting from have not to have, for instance.
Yeah.
What are some of the, I'm interested from your perspective, what are some of the changes that really do go on in their mindset from that? Because we've not only talked about the kind of absence of connection and competency there, but what in the mindset of them, what changes when they do become ultra high net worth?
So when someone starts out not stupendously wealthy and then becomes stupendously wealthy.
Yeah.
Okay, there's no one single journey, but based on what I have seen and observed over the years, and there are a couple of white papers out there actually that have, in a more sort of academically rigorous way than my idiosyncratic observations, have identified some of the hallmarks of that journey. And I am informed by them. But what can happen is loss. So how people get wealthy quite often is maybe there's a giant inheritance that's either expected or unexpected. Quite often it's the sale of a business, either one that they started and ran or that they worked for. I've had a number of clients lately who were early employees at companies that went public, and they became wealthy that way. And when that happens, there is loss, and it is not talked about for the reasons we talked about earlier. No one cares. No one wants to hear your sob story, your sad story about how you're depressed now because you got phenomenally wealthy. But here are some of the ways that can happen. And I wanted to speak tenderly about this because we live in a world right now where there's so much need and so much poverty. And I just want to acknowledge that me being an apologist for the very wealthy is not a politically awesome move.
Yeah.
But they're people too. And that's the whole reason I do this work, is because I have this crazy hunch that they're human beings and maybe deserving of some care, especially in light of all the good that can be done if they decide to do so. So when I talk about loss, you and I are all familiar with what happens when regular people lose their jobs. It's devastating. Now, there's a loss of income. That's the main thing for most people most of the time. But there are psychological effects as well, right? Loss of community. That sense of connection that I talked about earlier quite often gets ripped right away, to the extent that, especially for men, many of their social connections take place in the workplace, right? I think men, love you lots, tend to be a little bit less skilled at building connections, at making friends after childhood, right? Especially outside of a workplace. So we have sports and we have the workplace that really help with those things. And then when the workplace is sort of ripped out of your life, there's a real sense of loss. There's a sense of identity. I used to work with some wealthy investors who had sold businesses, and we used to talk all the time about the Starbucks problem. Now, Starbucks has lots of problems. Here's the one I'm talking about. It's when you go from being a fancy and important person, maybe your name's on the door, everybody says, oh, good morning, so-and-so, like everybody knows your name, you've got staff, you're real important, right? And then you sell your business and find yourself third in line at Starbucks, and that's your big identity. That can be a sense of loss for people. Again, especially for men. I want to be really empathetic there, and I am, in fact, empathetic there. Women, for lots of reasons, tend to experience that sense of loss less dramatically. Maybe because there's more that competes for their time and attention and social energy anyway. In many cases, not all. Anyhow, and then the identity thing is huge. I had a client I supported for years who used to say, I grew up hating rich kids, and now I have them living in my house, which always makes me giggle. And it's just like such a funny and loving and really insightful way of encapsulating this journey that some people go on when they become wealthy.
Yeah, I guess last time we spoke as well, you mentioned about the kind of the difference in risk. I don't want to say risk tolerance, but kind of attitude towards risk, which is when they've been growing those. So we say, let's just take the example of someone who sold the business and became wealthy. Yeah. They've had to take extreme risk for extreme reward.
100%.
And then their mindset when they do, for instance, sell the business, there's not really any need for them to take that massive amount of risk anymore because they've already got the huge amount of reward. The mindset switches from risk taking to risk mitigation, as in the fear becomes not making the money because you've already made the money, it becomes losing that wealth.
Okay, let me interrupt you here because the mindset probably should shift from risk taking to risk mitigation, but quite often takes a minute to catch up. Like quite often doesn't. The skills and instincts and decisions that help people make money, make a ton of money, are pretty different, it turns out, than the skills and instincts and vocabulary and decisions that will help them preserve money. I'm going to pause and tell you a quick financial planning joke, and then we're going to explore that further. I was at a conference years ago, maybe a decade ago, and I don't know if I should say his name, Wilbur Ross, a big private equity guy who later became a big deal in the Trump administration. He was speaking, and he said, folks, there's only 3 ways to reliably outperform the market: concentration, leverage, and fraud. Which, I mean, maybe that's a corny financial planning joke, but to me, I giggle about it all the time. Thank you for laughing. That was nice of you. And so what I want to say about this is that in order to become wealthy, most folks, on purpose or not, quite often not on purpose, use at least 2 of those 3 things, like setting aside fraud. Let's not contemplate fraud. Let's cover our ears and hope it doesn't happen, right? And take intense risk mitigation strategies to make sure it doesn't happen. But in terms of concentration and leverage, that's how people get rich. Mm-hmm. You build a business, you are highly concentrated. You build a business, you are highly leveraged. Again, whether you know it or not, you've got high operational leverage. And so in terms of how you're allocating your time, in terms of how you're allocating your whole balance sheet is probably wrapped around this thing that you're building, as is the case for so many entrepreneurs. God bless them. It's a beautiful thing and it works and it's very rewarding for them. And the minute they sell it, quite often the instinct is to put their chips back on the table, to say, I'm great at this. Just look what I just did. I'm great at assuming big concentrated risks and leveraging the bejesus out of them, right? I'm good at this. Let me do it again. And far be it from me to tell anyone that they're not good at something they think they're good at, especially if it has been validated by the market.
Yeah.
By definition, they're good at it because it worked. It's a very tricky thing to try and tell someone like that also they were lucky. And I have not had a great record of doing that successfully. I'll be very candid. But it's a very tender thing to helps to accompany a very powerful and successful person through the process of entering a different phase, right? Of saying, hey, what if we didn't put all the chips back on the table? I say we here, I'm not the financial planner, I'm not telling them what to do, but as an ally, a consultant, a colleague, a friend in some cases, you want to hold the person during a weirdly vulnerable moment in their lives, right? Again, nobody would think it is, but it really is. And help them think through, again, back to what matters most to them. Help them think through the principles by which they want to make decisions going forward. It may be for someone who built a business or multiple businesses, and that's how they got wealthy, that the feeling of risk, the feeling of putting big concentrated positions on, makes them feel alive. And the idea of a perfectly diversified, multiple layers of managers, fully risk mitigated wealth preservation portfolio makes them want to jump out the bleeping window, right? Like it's so deadening to them. It makes them go crazy. And quite often when that happens, if they find themselves in a wealth preservation portfolio and it is a deadening feeling to them, they will start taking weird risks elsewhere. Yeah. Either, they become crypto bros or well, set aside crypto, maybe it is and maybe it is not a giant crazy risk, but you see them pursuing that feeling of aliveness elsewhere. So why not do what they did before, but in a different way? Pursue that feeling of aliveness, that feeling of competence, that engagement through intelligent and maybe scaled down concentrated positions. Go do your angeling, but then, I don't know, you want to be a partner in a growth company? You can do that in the industry that you've made your money in. You think that upcoming entrepreneur could use some adult supervision and a thought partner in managing the risks that they'll face in the next decade? Well, from someone who managed them so effectively in the past decade? Absolutely. Want to go be on a corporate board? Yes, sir. You need to buy your way in? Okay. Go do that.
Yeah.
I don't know.
It's interesting.
Did that answer the question?
It did. I mean, I don't think it was really a question. I think it was more of a statement from me, because that's what you assume the kind of mindset switch is. But then you've just explained that it's actually, I mean, again, like you said before, nothing here that we're talking about is universal, because there's always going to be different. Every single person is different. So therefore, some people might have that mindset of risk mitigation and all that kind of stuff. But it's interesting that trend. It's nice. I'm just trying to think for the audience, because those guys, it's very, very rare that they will come across anyone who is ultra high net worth. Some people will never, ever have a client who is ultra high net worth. There's my alarm going off to feed my dog. Sorry, everyone. So, but sometimes we do, and it's a really weird prospect for financial planners who generally deal with middle class incomes, and still wealthy people, but this level of new, like, ultra high net worth is just something that they just, and then for them it's terrifying, because for all of a sudden the risk goes higher, because that, like, higher level of wealth, the risk becomes for some reason higher as well.
The risk to the advisor.
But everything, the situation, everything, every decision that you make is going to be worth so much more now.
Yes, I understand.
Not for your reputation, but in terms of financial sense as well. So I'm just trying to think of, for the audience, rather than thinking of some things that they could do, because there's millions of things that they could do, what have you seen over the years that people in the audience should avoid when working with those ultra high net worth individuals?
Moment of empathy, right? For the advisor who encounters someone who turns out to be much, much wealthier than their other clients. And the empathy, especially because what I think that advisor needs to avoid doing is probably what their instincts exactly tell them to do, which is say yes, sir, no, sir, be a sycophant.
Yeah.
Serve that client to the nth degree. And maybe this is terrible advice, because I'm sure there are phenomenally wealthy people out there who love it, who love that. But my view of the reality is that when you're a phenomenally wealthy person, sycophants are easy to find. Mm-hmm. And the rare thing to find is genuine, authentic connection. And I think it may be a big ask. It's definitely a big ask. Who am I kidding? For an advisor to whom getting the client and keeping the client would change their life, to have them just chill out and be a normal person, like, that's a really big ask. And also, I think that's what needs to happen. So I'm giggling because this is really hard advice to follow, but try to be a person about it, right? Best practices in human interaction. I am not an expert at this. You have experienced this. I'm weird and out of bounds sometimes, but a great thing to do is to be real. Say, hey, how are you? Mm-hmm. And if the answer is fine, okay, well, say more about that. You want to now, that may be a bit much for an early conversation. Trust is both built and earned on an ongoing basis in human relationships, but try to listen. Try not to make assumptions. Try not to assume that because they have a ton of wealth that they are into it. And what I mean by that is quite a lot of people who are wealthy do not piss in gold toilets, right? Do not go home and gaze at their jewels. It's not like Scrooge McDuck in many cases, right? Quite often folks who are wealthy want the same things that some of the rest of us do. Yeah. Rest, great entertainment, great relationships, good food, someone to come and do their laundry, lots of differences, of course, but try to be real, try to keep it real.
Yeah, I guess it gets in. If you do kind of become that sycophant, it's because it would annoy them, because it gets in the way of that thing that you mentioned at the very start, which is the connection piece. These people are longing for connection because perhaps they have lost that connection.
Well, because they're human beings, yes.
Yeah, I mean, yeah, exactly. I mean, we everyone wants connection, but
right.
Try not to lose that connection, and try not to feel the pressure of success in a way.
So hard to do.
It's
virtually impossible, if I'm being honest.
Easy for us to say on here, isn't it? But I know that
super easy to say.
I know exactly what I mean. It's
let me say one other thing, which is for years I struggled with the idea of speaking truth to power. I struggled so much with it. I was like, why am I not better at speaking truth to power? It's clear the truth, whatever truth is, right? But my truth is like pounding in my head, and it's not coming out of my mouth with these people. Boy, do I need to work on my skills. And so I did. I did courses, and I did workshops, and I did retreats, and I meditated, not a lot, but a little, and like really tried to build my skills, learning from others. And finally, I realized that maybe, many professional women will resonate with this, I think, that it actually wasn't my fault. It wasn't that I had crummy skills. It was that if you don't have a lot of power in a given situation, you are correct to presume that it is very hazardous to you to speak truth to power, because if they get annoyed, your career is over, right? Like, This is a reality. And so when I got better at it over time, it was because my power actually increased.
Interesting.
Relative to the client. And that came in the form of some psychological stuff and some real life stuff. I just got, grizzled and middle-aged and cared less about rejection. That was one thing that happened. But another thing that happened was I changed the way I work with clients. The loss of any particular client was not going to sink me.
Yeah.
Because I had lots of others. And so that gave me a ton, like the power to walk away with love and empathy, but just to have self-respect and a boundary and just walk away, is immensely powerful. And that made all the difference for me.
Yeah. It kind of shows the power of pragmatism as well, doesn't it? With this kind of stuff, it's hard to be pragmatic when you are starting off and you have to take, and you can't afford to really take those risks, because it's totally terrifying to be pragmatic. But when you do have less risk, and you're not going to lose all your income if you do lose that one client, it's therefore easier to become pragmatic and think, well, what's the worst that can happen? Because there's nothing terrible that can happen in reality. Yeah. Yes. That's interesting. There's something I really wanted to talk to you about, and I don't want us to skip over this, because as you mentioned at the start, we've been talking about this with a lot of people who've been on the podcast, which is the growth in impact investing and green investing and all that kind of stuff. We're not going to spend a lot of time talking about green investing today, because we could do another 3 podcasts on that, but it's a very exciting area. And as you can imagine, for a lot of the people in the audience as well, it's exciting for them. Yes. What do you feel most excited about? Let's just pick on that impact investing part, because it's only one part of the spectrum of capital. There's loads more stuff in there. There's ESG, there's SRI, there's responsible, there's all sorts of different stuff. When it comes to impact investing, what do you feel most excited about when it comes to impact investing at the moment?
All right, real quick, asset class by asset class, let's go. Public equities. There are some incredible activist strategies out there that have been making change in the world. And the example I love is in publicly traded companies, quite often employee contracts include a clause. This is maybe a US thing. It's probably not just a US thing, but I want to acknowledge that it may just be a US thing. A clause that requires forced arbitration for sexual harassment and assault. So if you get harassed or assaulted in the workplace, man or woman, you have signed a contract with that employer that says you may not get a lawyer and proceed and pursue justice in a court of law, because that would be embarrassing to the company. Instead, you must use an internal arbitrator, and it will be subject to confidentiality. So you may not speak, and you have no right to a lawyer. Now, there are investors, managers, ETFs, and managed equities strategies that are bothered by this, and yay, and have taken on proxy battles with certain companies to make a change. And a couple of them have been successful. And that, I tell you what, that fires me up. That is so exciting. How cool to see actual real life change in the lives of people, especially marginalized people, especially Black and brown women, in public equities, just by hiring one public equities manager over another. How cool. Now let's talk about bonds. What's exciting in the world of bonds? Haha, not much. That's my second financial services
joke. Nice.
Financial planning joke. Okay, no, just kidding. Actually, so in the US, we have a problem you may have heard about overseas with police violence. Mm-hmm. Big, hairy, deep, horrible problem. And so what can be done? Well, a lot of different things, one of which is available to investors, and that is a bond manager, bond managers and bond portfolio strategies that select for municipal bonds, so general obligation municipal bonds that are backed by basically the tax revenues of a particular municipality, select for municipalities with better records on police violence. There is one in particular that also does an activist piece where they'll select for the bonds issued by municipality. This might be a US thing as well. You guys don't have municipal bonds. I'm sorry about this. The bonds of municipalities with crummy records on police brutality, but they're close to politically, based on relationships and conversations with activists in the communities. They are close to being able to push city governments to action, to make actual real change. And by mobilizing the capital markets, they're able to actually affect the lives of especially marginalized people in communities where they are being brutalized in the street by their local police. So there's that. Now let's talk about cash. Most boring asset class, right? And lots of impact investors are like, what am I going to do with cash? Let's just buy some treasuries. We'll buy some short-term, commercial paper, 30-day money, whatever it is, cash equivalents. I think this is a huge oversight. I know this is very nerdy and ridiculous. There is so much that's happening in the world of impact cash. It is incredibly exciting. Only a little bit is available to European investors. There's a lot happening in the US right now. I should say only a little bit of it is available to European investors that I know of. Why would I know all of the things? I do not know all of the things, but for the most part, what I see in the US from this perspective is the ability to finance Black-owned banks. The ability to, there's an RIA here, a registered investment advisor here, an independent investment advisory firm, regulated as a fiduciary, that has a cash product that backs an NGO that's building water wells. And you don't sacrifice, I am not a financial planner, I am not a financial advisor, I am not making representations about the creditworthiness of this thing, et cetera, et cetera. However, I am told, and I have seen evidence that one does not sacrifice liquidity. What a cool thing. So very excited about cash.
Yeah.
Again, I'm very nerdy. Now let's talk about real assets. Sustainable forestry practices. Yeah. What are sustainable forestry practices? Okay, not an expert. I am not an expert, but I know a little bit about a lot of things, and inspired by and informed by, and hopefully in a compensated way, educated by Indigenous communities. Certain sustainable forestry managers, fund managers, are able to make use of very old Indigenous forestry management practices to earn additional revenues beyond the single monoculture approach to forestry. And in the process, none of us will be surprised to discover that way more carbon is sequestered, and forest land, huge swaths of forest land, are able to be maintained in ways that are more resilient more resilient to forest fires, but also help increase the resiliency of our planet to climate change. So that's forestry. And then I think in impact investing, there's so much to be said about like early stage private company investing, either in direct companies or through funds. That's just a whole nother podcast. There's so much that's exciting. There's one other asset class that many of your folks will never have heard of, which is community loan pools and Cdfis. This is definitely a US thing. What that means, I try not to use acronyms, but here we go. Community development financial institutions. This is a very big and diverse category of financial institutions, but these are generally speaking loan pools that provide low interest, affordable loans to communities that are otherwise only can access capital through really rapacious payday lenders and high interest capital access models. So that is not, that kind of investing does not fit into your typical asset allocation,
No,
but there needs to be more of it.
I'm so glad I asked that. I'm so glad.
Rant.
I'm so glad that I asked that question because to be honest, we could have done a whole podcast on that. The one that really struck out for me was, and I don't think you probably expected me to say this before you said it, but the cash one, for instance. I mean, that is, I'm just thinking, I did a podcast a few weeks ago with Lindsay Swanson, who is, she runs a financial planning firm for sex workers, so adult entertainers. And she said one of the biggest issues that marginalized group faces is that their bank accounts keep on getting closed down by their banks because they don't meet the criteria or terms and conditions or whatever. So I'm thinking if there was an impact investing thing or impact cash, that you could have a sex worker owned bank. I don't know if this is even possible, but I'm thinking out loud and I'm thinking creatively, that would get rid of that problem for that marginalized group because you're literally solving things with impact cash. I don't know if that's possible or not, but sorry, go on.
Sorry to interrupt. Thinking creatively is what is required of us as human beings in this moment in history. Thank you for thinking creatively. Thank you for wondering what is possible at the edges of what is the known practice and proven practice. It's got to be possible. There's got to be a way. It may be expensive. It may be weird. It may not be your typical publicly traded financial services firm that's going to do it. But I can imagine finding backers to guarantee or to buy the certificates of deposit at a smaller financial institution that would then allow for some access to capital for folks who need it. Another thing that needs to happen, and I'm seeing a ton of innovation around this, is coming up with new ways to assess creditworthiness. Because quite often a credit score, the usual ways to assess creditworthiness are pretty racist and pretty difficult for someone who grew up in poverty to overcome. And that's not the world that we want to live in. So how do we rethink what it means to be creditworthy? The phrase social underwriting has come up in conversations that I've had a lot lately. So relational underwriting. I know that sounds probably really weird and crazy to most folks, but that's a thread that we're trying to pull on to see what might be possible.
Yeah, what we've definitely got from the answer to that question is that it is super duper exciting and there's loads going on, and we should never stop thinking creatively. I agree with you on that one. Last couple of questions for you, because we've been talking now for 53 minutes. This is what I mean. You see at the start, I was like, go on, I'm going to talk for hours.
Yes.
You used to work on Wall Street. You don't anymore, obviously. But you've seen financial planning grow and develop over those years through even things like what you do now with advisor search and all those kind of things. But how much have you seen financial planning as a profession grow from those, let's just say, 90s, early 2000s, that kind of mentality of what it was back then to today? How much have you seen it grow and develop?
A lot. I mean, who among us has not grown and developed a lot over that time?
Yeah.
We live in a very different world. And financial services as an industry is, I think, generally speaking, pretty data driven, and they know that we live in a different world, and they are quite driven by market opportunities to evolve. And this is great. So for me, when you say financial planning industry, I think of it in two different ways. One is the actual planning, like here is your financial plan. These are your long-term goals. These are your inflows and outflows and the timing and the potential implications to your asset allocation that will allow it to grow, but achieve the stability that you're looking for. And then the other is the actual investing piece. I have seen the investing the investment advisory industry grow and develop in lots of ways. I have learned almost everything that I know about impact investing from them over the years. So thank you, financial services industry, for being a little creative on the margins and then telling me about it, because I'm able to spread the word about the good work that's being done. When I think about financial planning in particular, the only thing I'll say is financial planning as a standalone service, at least in my world, has become harder and harder to find. So to hire someone on a flat fee basis to run an analysis of your stuff, your investments, your income, your liabilities, all of it, is harder and harder to find, especially at a level of sophistication that would make sense for a high net worth client. Yeah. And so if you are one of those people, good on you, because it's really valuable work.
Yeah. And get in touch with Nancy after this, because she wants to pick your brains. So last question for you is one that we ask everyone. And I mean, I've, by the way, audience, I've skipped out loads of questions here. And we could get her on for part 2, which would be good. Maybe at some point. But the last question, which is the one where we ask everyone, is something around something that you've consumed. I don't mean interesting consumptions, I mean content consumptions. So yeah. I mean, you know, a book or a film or a piece of music or a podcast episode, anything that has really had an impact on you. Most people go for books. What would you say has really impacted you over the years?
I've read a lot of financial planning books and a lot of investing books over the years, and I'm going to answer differently than that. For the last year or so, in part pandemic inspired, I have, like many other people, gone wild for gardening. I find it very healing in that it's a highly turbulent political environment. We're having a moment here in the US that's pretty brutal, frankly, and grim. And I find it very healing to put my feet and hands in dirt and make things grow. I am a learner. I am not good at it, but I try with a great deal of enthusiasm anyway. And I read books increasingly about permaculture. So for the last year or so, I've been studying permaculture and reading about permaculture. And the observation that I want to make that I think may be relevant to this conversation is that in one of the permaculture principles is pay attention to the edges. That the borders between one kind of growth and another kind of growth are the most biodiverse and the most rich in nutrients because of the fact that they are edges. And if I want, hopefully this isn't not working too hard to make this into a metaphor for financial, for the financial world, but we often get pulled into this, at least in my world, often get pulled into this battle between capitalism and what is perceived to be socialism, right? This is a big political thing. We talk about authoritarianism versus democracy, and these feel like very deeply drawn lines. And it feels really hopeless a lot of the time. And I guess what I want to offer from my studies in the world of permaculture is that maybe if we can set aside the us versus them and the big battles, this is again easier to say than do, and just focus on the innovation and creativity and diversity of ideas and of thinking that happens along the edge, along the margins. I'm not suggesting we can innovate our way out of our political moment, but we gotta try.
Yeah, absolutely. Wow. Well, I think we'll draw it to a close there. Honestly, it's been so much fun having you on today. Brilliant conversation as always. What we like to do is we like to give the last word to our fantastic guests to say a big thank you for coming on the show. So can you tell our audience where to find you, how to connect with you? And I usually put people on the spot with asking for some motivation, but I've started giving people the choice now. If you have some motivational words for the audience, feel free to give them. But if you can't think of anything, then don't worry. I
have no motivational words for the audience, but I will offer I'm on LinkedIn. People can find me there. My company is called Tyche Consulting Services. And I guess I'll just offer that as a last thought. Tyche is this Greek deity, ancient Greek deity, who was the daughter of Aphrodite and Zeus. Aphrodite, of course, the goddess of love, Zeus, the most powerful of all gods. And this idea, back to the edge, right? This idea of the coming together of power, the power of capitalism, and love, the sort of that which drives philanthropic thinking. I think there's so much innovation and hope to be found at the intersection of capitalism and philanthropy. So my company is named after that.
See, that was more, you killed two birds with one stone there, because fed two birds with one stone. As
Thank
you. You mixed your motivational statement at the end with also plugging your business as well. Fantastic work, well done. So that was Nancy Reid from Tyche on the Next Gen Planners podcast. Thank you so much to everyone for listening. If you enjoyed this podcast, you can find it on Spotify. Obviously, you already know that because you've already listened to it. Apple Podcasts, Google Podcasts, and on our website if you want to share it. And our website is nextgenplanners.co.uk. On there, you'll find more information about the training contract, the Advice Stack program, our amazing community, which now has over 750 people in there, and about getting involved in our conference next year. So we've just had this year's one. So next year's one will be coming up in 2023. It'll be a global financial planning conference, as always, and it'll be a lot of fun. And of course, we are on all the social media channels. And if you enjoyed this podcast, please do leave a review. I feel terrible asking for this every single time, but you have no idea how much it helps us, and we would love to hear what you think of the show as well. So that's all from us today. A big thank you once again to Nancy for coming on the show. Thank you guys, as always, for listening, and we will see you in the next one. Bye-bye.